The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions bored of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now here on the program as we take a broader look at the ag commodity and livestock trade and the economy in general as a whole. Joining us, our good friend Chad Hart, economist at Iowa State University, is with us here on the show today. Chad, it is always great to talk to you, sir. I hope things are going good in Iowa. I hope you're doing well.
Doing well. I hope you can say the same.
I sure can say the same. Busy time of year for many folks. Our farmers, of course, they're busy in the field trying to wrap up the spring planting season. I know planting progress-wise, we've seen a pretty good clip here the last 2 weeks or so as far as getting corded soybeans in the ground in especially Iowa and Illinois. Let's start there. What's some of the latest you're hearing with this spring planting season from farmers when you talk to folks across the state of Iowa?
Well, that's the deal. I think when we're looking at this year, it's definitely, let's call it, we're feeling a lot better than we did last year at this time. So, you're looking at planting progress across the nation. On the corn side, we're roughly halfway done, which is a little bit ahead of schedule. Not outrageously ahead, but still, anytime we're ahead, we tend to feel better about those yield prospects as we're looking out there. And a lot of that strength has come sort of up the core, as you mentioned, the Corn Belt. Missouri sort of kicked it off, and now Iowa and Illinois are racing ahead. And so you're seeing that heart of the Corn Belt getting in a timely manner. And that bodes well for the national crop as we're looking forward. Now, we still got the issues as we look up towards the Northern Plains, wondering how well that's going to go on. So I think the market is still watching these, planting progress numbers, and especially probably starting to key on more of the emergence as we're looking here to see how quickly this crop can emerge and how well does that set up as we look towards tasseling time in the middle of summer, trying to figure out how that's going to delay out. When you're looking at soybeans, we are running well ahead of pace. I mean, the idea is that there's only been a couple of years quicker than what we've seen so far this year. And so, we've got nearly 40% of the crop in now nationwide. And again, it's that same sort of tale of it's the center of the U.S. that's sort of leading the charge, and we're worried about the fringes as we look out there. So I think when you combine these numbers with USDA's projections for 2023, which, let's face it, right now they stick with their trend line yields, people are comfortable with those trend line estimates given the planting progress we've seen.
And that's a great point you make, because obviously here we have now got the release of the May World Agricultural Supply and Demand Estimates report. And you mentioned that 23-24, those numbers using those trend line yield projections from back earlier in the year. And, really, Chad, looking at that WASDE report for the month of May, some bullish surprises on the wheat side that I know we'll talk about here in a little bit. But as far as quarter beans, it sounds like those ending stocks numbers getting a little bit bigger, and a lot of that tied to, as you mentioned, a lot of folks comfortable, at least for now, with the weather and everything else, and those trend line yield figures, Chad.
Oh yeah. So as we're looking, as you mentioned, these would be the first official numbers that USDA releases for 2023, but they line up fairly closely with what USDA released in their Ag Outlook Forum back in February, which pointed to 181.5 bushels on the corn side and 52 bushels on the soybean side. So both of those would be basically record yields if we were able to hold them. But you can sit here and go, okay, if we're planting ahead of usual, that does tend to lead to trend line or better yields. And so that leads the support here. So we're staring at the potential for record corn, record soybean production this year if things hold the form, which is why the WASDE, a lot of the discussion, I think, was more on the demand side. Can demand rebound back to help absorb these larger potential crops?
And with the demand, that was one area that surprised me. I really thought USDA was going to cut exports of corn with the China cancellations and some of the worry there with China trying to maybe get cheaper corn out of Brazil, yet they raised exports for 23-24. So I'm curious, Chad. I mean, what is USDA thinking here, considering just the poor pace we've already seen on the corn export side? What are your thoughts?
Well, I'm going to say that actually the cut was in there, but it was hidden. You didn't really see it or feel it. So if you look back at what they did within the May WASDE, they actually did cut corn exports for 2022, dropped it down 75 million bushels. Now, when you look at 2023, the number they've got out there is 2.1 billion, which would be up significantly from what we're at here in 2022. But it is actually lower than what they had said at the Ag Outlook Forum. At the Ag Outlook Forum, they were saying they were looking forward to 2.2 billion. So they actually did cut exports by 100 million bushels from their earlier, I guess I'll call them projections, but that's still above what we're seeing this year. So they are expecting that as this bigger crop rolls in and prices weaken because of that large crop, they are looking for sort of that back channel, the lower prices to help incentivize some additional sales as we look deeper 2023 and early 2024.
So I did miss that. So thank you for clarifying that for me. Are you worried though with the geopolitical issues with China and maybe China, stepping out and gobbling up a lot of cheap Brazilian corn? Are you worried about that potentially affecting that export number down the road here, Chad? What's your thoughts?
Yeah, I am definitely worried about that, just because when you looked at the world totals that we're seeing in terms of production out there, the idea is USDA was finding that we're going to see a significant rebound, not only in U.S. production of corn, but global production of corn. The idea is that we expect Argentina to recover from the drought problems they've had this year to have a bigger crop next year. We're looking at Brazil continuing to produce, considerable amounts of corn as we look at there. And we're also expecting the European Union to expand production as well. So I think we'll have a lot of competition out there on the export space. You combine that with these geopolitical issues that we're dealing with, and especially, how to put this, the uneasy relationship that we're having with China right now, and how quickly China's moves can definitely pull on the corn market, because they have grown to be one of our largest customers over the last 5 years.
Well, with corn, I know a lot of farmers are staring at futures prices, especially on D's 23 cord, getting close to putting a four handle on this here and hovering around that $5 mark, that kind of psychological mark. You and I have talked about this many, many times. Markets that go up have to come back down. I mean, as we think about prices weakening on the corn side specifically, are you worried about that psychological $5 mark here? If we were to break below that, hold below it for an extended period of time, I wonder if that would do any sort of chart damage for us here potentially, Chad.
It definitely could. I mean, I think as we look out there right now, we have basically approached those that $5 psychological number there. If we do break through that, I know, for example, here in Iowa, we estimated production costs at the beginning of the year for corn at basically $5. So we're getting to that break-even level where you do see a lot of producers move to protect that level if they do approach it. And so I think we are, right now sort of on that precipice as we look out there. Now, part of the, I guess I'll call the beauty here, is that we do tend to see here between Mother's Day and Father's Day that prices do tend to improve a little bit, usually historically. And again, it will be weather based that would drive that. But the idea is that once we get beyond in the mid-June into July, I think we could see continued price pressure, especially, again, given the speed at which this crop went in. If it's still looking good as we get towards the end of June, that will really consolidate the pressure on the supply side for this market.
I think something that is helping right now on the corn side is cash basis levels in certain pockets are still pretty robust, and that's maybe trying to pry some corn out of farmers' hands here as we work through the back half of the month of May.
Yeah, it definitely is. And when you think about it, it goes back to how short last year's crop was, especially in certain regions of the country. As we look towards the western corn belt, that's an area that has been trying to draw corn back towards it now for basically 18 months. And so that continues to lend support, but that support does start to break down the closer we get to harvest.
We're having a conversation today with Chad Hart from Iowa State University. Chad, let's talk soybeans. Soybeans, USDA did not make cuts to Argentina's crop on the May WASDE report. They kept it unchanged. I was a little surprised by that. I think some folks were, just considering how poor things are there. But nonetheless, I think some of those whispers still out in the trade helping to support bean meal, especially seeing a nice rebound to the upside here in the last week or two. What's your thoughts overall in this soy complex right now?
Well, that's still, I think as we look here, we are waiting to see if there's still another shoe to drop with Argentina. I mean, we've already seen, those production numbers drop fairly significantly. You're basically talking about half a crop now coming out of Argentina compared to normal. And as we're looking forward, USDA's projections show that rebounding back up as we look 23, 24. But yeah, the other game here would be what's going to happen on the demand side. And with Argentina being short right now, that usually helps support us in the export markets. We're not finding that much support there. And so I think that's the other challenge here, is that while Argentina is really struggling, we're also not finding that global demand is necessarily pulling more from the U.S. In fact, as you look at our exports, they're still good, but they're not quite as strong as they've been over the last couple of years. And we sort of got the same problem that corn has. We're looking at a record crop coming online, and we need more international demand to help support that.
Well, and I think one thing too here domestically, a lot of folks we've heard the chatter about the renewable diesel and bringing that expanded crush online here in the U.S., but still we're a little ways from that. I'm thinking maybe the end of this year we'll start seeing more plants online. Really feels like it's going to be a 2024 kind of thing though. So it feels like this market's kind of got to get through this period of watching the international demand side while waiting for some of this perceived domestic demand in front of us here, Chad.
Yeah, it does. And that's still, well, I always looked at renewable diesel as more of a, let's call it a late 24, 25, 26 issue as we look at there. We're building a lot of that infrastructure for a couple of years down the road. I think you combine that with the weakness, relative weakness that we've seen in crude oil and fuel prices, and that slows that push for renewable diesel down just a bit here, delaying the need for that to come online quickly.
Chad, let's shift over to the wheat market, and wheat has been a curious case here. Wheat doing wheat things is always the favorite saying, and I'll make the argument to you, and I love your thoughts here. It feels like wheat specifically, we got to think about this via class. The soft red Chicago, really the crop looks good in the U.S. in most areas, but yet Kansas City wheat, we're getting some confirmations of the poor wheat here this week with the Kansas Wheat Quality Tour. We've already heard about poor conditions in Oklahoma, planting delays that you alluded to earlier in the Northern Plains affecting spring wheat. So all of that weather issue together feels very bullish to this market. You throw in the bullish surprises from the May WASDE report, and then the cherry on top, of course, is a continued geopolitical issues in the Black Sea region with Russia and Ukraine and that whole situation there. All this together, it feels like the trade overall is finally acknowledging the fact that we have issues here, and we're seeing that reflected in prices finally, it seems like.
It is, but I think you bring it up in that, yeah, this is definitely a class issue. It's not global for wheat, across all types here. You mentioned, the ideas when we're looking, it's a hard red and spring problem. It's not a soft red problem. And I think that's the major challenge here. When we think about, Chicago wheat futures, that's a soft red versus a KC, which is, hard red. And then Minneapolis would be our indication on the spring side. And so when I'm looking here, like I say, the problems are hard red spring or hard red winter and spring as we look out there. The spring, it's a matter of will it get planted. The hard red winter, it's more how much winter kill do we see, and then what do farmers do about those fields as we look out there. And so it's a wild card not only for the wheat market, but I would argue also for corn and beans. Could we see some of that land pop out of winter wheat out there in the plains and head towards corn or soybeans? Now would be the time they would be doing it. So are we going to see that here? But as you're looking here, I'd say, USDA was looking at, we are seeing yield estimates down, about 2 bushels compared to last year. We are seeing basically, there's demand out there, but sort of like I mentioned with soybeans, we're not getting the international surge that we might have hoped for, where we're still seeing that export number decline as we look further out. In fact, as USDA looked out into 23, 24 for wheat, they're showing less exports, not more. So I think that's the challenge we're having with wheat. We know we've got problems out there on the supply side, especially hard red and spring, but we also have demand issues that are attacking all across the board when it comes to wheat.
You mentioned some of those potential acreage shifts, possibly. If we do see any of those late season acreage shifts, when would we really get a confirmation of that? And B, would the trade pick up on some of the whispers? And really, if there are any acreage shifts at this point in the season, would it be enough, do we think, to move the needle one way or another here, Chad? What do you think?
It probably wouldn't move the needle that much, and we won't really get a confirmation until the end of June when we get that acreage report from USDA. But as we're looking here, I think it's more just, okay, the whispers will confirm the potential for bigger corn and soybean crops. Just adding a few more acres in there to sort of ensure that, yeah, we're looking at those potential records out there because we've just gathered that much land in the corn and soybeans.
Risk management wise, Chad, I would love some thoughts here. Just what you think, what you could share. Obviously, plenty of volatility. Some of these prices coming back down to at or even slightly below the cost of production in some areas. So I feel like in general, farmers just got to have that pencil sharpened up here as they're marketing here through the summer and into the fall, just with the way this market is feeling and shaping up. Would you agree with that?
I would agree with that. I mean, I think when we're looking here, hopefully especially on the corn and soybean side, hopefully farmers did take advantage of what we had earlier this spring and early summer, where we did have some better prices to lock in. Even now, there's still opportunities if we wanted to put in price floors by utilizing puts, for example. There's still, we're still able to do that as we're moving forward. But I would agree this is one of these deals of where we want to be watching the markets and taking advantage of any seasonal rallies we might see here in the short run to try to lock in some small profits as we're looking here, given how the margins have tightened over the past 5-6 months.
And of course, the broader economy, interest rates, the debt ceiling, all of that concern, that's a whole nother issue. But it is also an issue that is important to our ag commodities, both grains and livestock, as we continue to watch how that affects everything: interest rates, the cost to borrow money, et cetera, operating loans. How does that affecting the family farm balance sheet? I know that we could spend 10 minutes talking about that, Chad, I'm sure. But of course, we continue to follow it and see how it impacts things, don't we?
Definitely. And I think that's one of the challenges right now is that over the past few years where we've had these tighter margins, we've done that in a low interest rate environment. So it made it sort of easier to find money to help cushion the blow as we're looking out there. Now we're doing this in a higher interest rate environment. We're facing more interest costs. So, hopefully farmers are working with their lenders to make sure that they have a cash flow plan covering those operating loans right now and making sure that we're taking advantage of opportunities to, like I say, not only try to lock in a little profit, but make sure that we lock in enough cash flow to set ourselves up well to deal with these higher interest rates.
We're talking today with Chad Hart from Iowa State University. Chad, I want to get some livestock thoughts from you here as well real quick before we run out of time today. This cattle market has been interesting to watch. We kind of started to chop around a little bit here. Maybe an indication we put a short term, near term high in this market, possibly. What's your thoughts with how this cattle trade has been acting here the last month or so?
Well, I think that's the deal. When you look, we did come down a little bit now. We've been rallying for about the past week. I think the market recognizes we're still relatively short on beef. We moved a lot through, especially the last couple of years, sort of pushing beef ahead due to the drought. Now we're waiting to see if conditions allow those herds to rebuild as soon as they possibly can. One of the things I was watching for in the WASD as well is what's USDA saying as far as their outlook for 2024 on the beef side. And they, said, no, we're looking at another possibly 2 billion pounds coming off the marketplace on the beef side. So that's showing that longer term, we're likely going to see higher prices. The question is, how quickly do they need to move there? And so I think here you've seen the market sort of pause, take a breather, trying to assess, okay, we know supplies will be shorter. What we don't know is how demand will hold up. And taking us back to the previous question, we're worried about the impacts of the recession, the higher interest rates. Does that start to wear down on our consumers? And that would put a lid on where prices could go.
Well, Chad, how about that hog market? Feels like hogs have done a couple different head fakes on us here, thinking we got a bottom, and then we rally, and then nope, we go break through that bottom that we thought we set. What's your thoughts with hogs here, and thinking about the WASD numbers we saw as well for pork production? Any insight? Do you think we could finally find a bottom here and try to turn this hog market upside to the upside a little bit at least?
Well, that's the deal. I think the market is searching for that bottom, and I noticed when I'm looking at futures, I was looking at them this morning. When you look out there, we seem to be trying to set a low here in the lower 70s. But as you look out towards, say, summer of 2024, we've got some prices out there 90 to 95. That's an indication that the futures market is expecting us to pull these numbers back up, and I think a lot of that is based upon international demand. Now, throughout most of the discussion here, I've been sort of negative about what we're seeing in the export markets. If you're looking for the one place that's been really positive, especially over the past, say, 6 months, I would argue it's the pork industry. We have seen exports rebound, especially in comparison to last year. We're looking at the potential to continue to build that market up, and I think that's going to help create a low here, hopefully throughout this summer, and then allow things to build back up as we go forward in 2024.
Well, Chad, great thoughts. Any final things you want to share with us before we run out of time here today? Anything else you want to reiterate for folks?
Well, I think in this case, when I'm looking at, for example, the crop markets, I think like I say, the planning progress and emergence will loom large on the supply side, helping support, those potential yields as we look out there. But again, I'll be watching the exports on the demand side. Do we see any signals that, if you will, the positivity I'm seeing in the hog market, does it spread to the other markets, or does it work vice versa? That to me is a big key here. When I look at what I got out of USDA's reports this past week, it was that it's the international demand where we seem to be having the biggest struggles right now.
Well, we appreciate the time as always. Thank you for joining us with that. Chad Hart, economist with Iowa State University and Iowa State University Extension. Chad, thanks again. We'll talk to you real soon.
All right. Thank you, Jesse.
And that is going to do it for this episode of Market Talk. Find us online, markettalkag.com. I'm Jesse Allen. Have a great day.